Hello everyone and welcome to a new update. Today it's Bitcoin market update. We're going to discuss that in a little bit, but before we continue, make sure to hit the like button, subscribe to this YouTube channel as I'm making content on Bitcoin, on crypto, on macroeconomics and financial news, and also on investment strategies which you can develop and which we will be doing here on social media. Regarding social media, there's also something else we have to discuss, which is the fact that my Twitter got hacked. Approximately 1.5 weeks ago, my Twitter got hacked and I had no access to the actual platform, through which there was a tweet posted from CK Sync, in which you were able to connect your wallet, whitelist, etc. I hope you have not been doing that. If you have been doing it, make sure to check the wallet, make sure to remove all the funds that you have in that wallet and to start a new wallet to prevent yourself from being drained from your wallet. Now I've got access back again on Twitter, so we will be posting content there as well. And I'm also starting to revamp my entire Instagram, so make sure to follow there if you want to stay tuned on more content that I will be producing in the coming period. When we talk about content, we also have a little shift when it comes to the content on YouTube. Before I went on my trip, and actually I've been having multiple moments that I started to swap my entire content on YouTube, going live, shorts, blah blah blah. But now I'm back on YouTube and I'm going to do what I like to do, which is bringing you content on a few topics. And I'll be bringing it on a disciplined and structured way, which means that today it's Bitcoin update day. You can already see that the length of this video is longer, which means that in this update we will be looking at on-chain analysis, we will be looking at higher timeframes, we will be looking at lower timeframes, a general overview of the Bitcoin markets, including some news related items or something that I find important to discuss in the update. If you want to stay tuned on ongoing updates, make sure to check out my Twitter. And if you want to stay tuned on how I trade, make sure to join our membership, which you can find in the description beneath. But today, it's going to be about Bitcoin. On Thursday, I'll be making a similar update, but that's going to be about macroeconomics and certain topics that I like to address with you. It can be about Credit Suisse, it can be about CBDCs, it can be about the Fed. It can be about anything else that is important, for instance, China, Russia, just collapsing or combining their forces to actually start building. All those topics I'll be addressing as well, and why I'm going to do that is because I find it important to educate or actually give my view on the markets, and also to combine that in investment strategies and to give a broader view, and ultimately to do things that I like. On Saturday, we've got another update, which will be at 11 a.m. The other two updates will be posted at 4 p.m. European time. And that's going to be altcoin update. So we'll be going through the altcoin markets, also discussing a few news-related items, giving you a broad overview of altcoins, and we will be discussing the altcoin portfolio, which I've not been addressing for a few weeks now as well, but we will do that in the Saturday update. And if there is something important, I'll go live during the Fed meeting. You will find that on my Twitter, or you'll find it in the trade letter, but you will find it on the other social media platforms, and here it's just going to be between 20 to 30 minute updates on markets. Also something else, I'm back in the Netherlands, and there is a reason for that, which is that I'm building the company again, and I'm also going to release a few new products. Maybe you've seen it on Twitter, but I'm going to release a course which is going to be a crypto and Bitcoin course level 1, which is an all-round course on Bitcoin, on Ethereum, on all the layers that we have in the ecosystem, on all the different subjects we have like DeFi, NFTs. We're going to discuss technical analysis and basics. We're going to discuss portfolios, how you build that, and more, which you can all find in the course. And if you want to win one of those, make sure to whitelist to the course, so you will be able to find all the information as soon as possible and might get actual extra features if you want to. So in this update, we're going to discuss anything related to Bitcoin. And firstly, we'll be discussing 3 interesting news topics that I've been getting through in the past week. So let's head towards the computer and then we can start discussing the news. The first topic that I'd like to bring up is the Restrict Act. And I think it's quite boring if you want to discuss this topic, but the Restrict Act could be quite important for crypto and Bitcoin. In a way that the governments are currently trying to protect themselves and not really ban Bitcoin, but make it really hard for yourself to actually use crypto. I will just be discussing why this act is simply important for you to understand. It is called the Restrict Act, which is primarily focused on technologies from foreign countries. For instance, the TikTok platform, which is heavily skewed towards China, and that's why the US doesn't really like it and China doesn't like the US, etc. The Restrict Bill, which is pronounced or announced earlier this month by the United States Senate, could be a threat to crypto. What is the Restrict Act itself? It is known as restricting the emergence of security threats that risk information and communications technology act. And it's known as the TikTok ban, which is what I just mentioned regarding China, as there are some suspicions that China gets data from TikTok or spies, etc. But how it's important as it's also a bill that is pretty much similar to the bill that we had prior to the entire tornado cash situation. What is stated here as well is the bill is conceptually similar to the International Emergency Economic Powers Act that authorizes the Treasurer's Office of Foreign Assets Control, which is a reasoning or a fact for Americans blocking from transacting with sanctioned parties. And that's where the crucial part lies, as the OFAC is the one behind the actual tornado cash ban, and also behind the fact that the guy behind tornado cash got arrested, right? So it could be a case that this entire bill is larger than just a TikTok ban, and that's what the Coin Center think tank has been warning about. But just let's go to what the bill actually means. And I've got the page up here. It is, as I mentioned, restricting the emergence of security threats that risk information and communications technology act, or the Restrict Act. This bill requires federal actions to identify and mitigate foreign threats to information and communications technology products and services, which is TikTok. It also established civil and criminal penalties for violations under the bill. This can be up to like 10 to 15 years. Also, specifically, the Department of Commerce must identify, deter, disrupt, prevent, prohibit, investigate, and mitigate transactions involving ICT products and services in which any foreign adversary, such as China, has any interest and that pose an undue or unacceptable risk to U.S. national security or the safety of U.S. persons. That's the trick. If, for instance, Bitcoin or any other crypto is going to put a risk on U.S. national security or safety of U.S. persons, then there is a loophole for the governments to ban the actual asset. That's where it becomes really tricky when it comes to this bill. And therefore, you should be understanding that this era or this period of time is the period where the governments are going to impose regulatory frameworks and ban or block a lot of things, which we will also get to in the second point of this video. So this entire bill is still very premature. But we also know it from MiFID in Europe, in which we had a bill where we could be blocking stable coins and have been getting into a lot of issues if you want to use crypto. And it's not, you can't ban crypto, but you can limit people from on and off ramping their money through crypto. So that's what they tried to do initially already, we know that. And we also see that the US feels threatened regarding China and feels threatened regarding crypto. So China and Russia combining forces, which means that they are exposing or imposing this term of restrict bill against China. On the other hand, we also see that they want to do CBDCs and they want to limit the usage of stablecoins because it's a threat to them. That's why they have been bankrupting a bank, a signature bank, which is a crypto bank. There were two other banks as well falling apart, which they said it's a crypto bank that falls apart. So it's all due to the fact that it's crypto, because they feel threatened. For instance, if we start to swap from the banks towards crypto, we probably will be the banking system will be falling apart. So this bill is very boring for you to look at, but it is important to understand that they try to limit everything that has been done in the crypto world, and it could be used for crypto as a whole. Is it important right now? No, I don't believe it's important right now, but stay tuned on this topic, as probably there will be more laws coming in when it comes to crypto. Now, the second one is something that I've been tweeted yesterday about Elizabeth Warren. Elizabeth Warren has some rumors around her because she has a certain amount of annual income, but her wealth is way higher than that. So how did that come? But the importance lies in what she has been mentioning in the update or in the interview that she has been doing with the TV show. And we'll just watch it, and I'll have some comments on that topic, which I find important to discuss.
With Bitcoin, there's no thing that backs it up. And that's what makes it different. It's just belief. You and I assess.
First thing here, it's just 10 seconds in this slide video, but she says nothing backs it up. It's just belief in which
You assess the value is going to go down, I assess it's going to go up, and therefore I buy.
She makes an assessment of whether the price goes up or down. Well, essentially, everything that people do in the financial world is an assessment. So it's not related to Bitcoin at all. Stock prices, commodities, everything has this assessment. But she also says that nothing backs Bitcoin up. Well, essentially, hard money is a medium of exchange that's hard to produce. That's the concept of Bitcoin, that's the concept of gold. This doesn't mean that you will have something printed with one click of a button, and that has an inflation of approximately right now 10% per year, controlled by a government. What she mentions is that it's exactly what the value of paper money, also known as soft money, is. So the US dollar isn't backed with anything, but still we use it because we have a government saying that we must be using it. Therefore, the value of the US dollar remains to be high, but actually Bitcoin's value is way higher, as the intrinsic value is higher due to the fact that it becomes harder and harder to mine one Bitcoin. The costs are accelerating quite fast, hence why you can see that the intrinsic value of Bitcoin is higher. So what she says about Bitcoin is actually true for the US dollar. It's just a matter of time before we will be staking, or before we will be having that coming into place.
So it's more like this artwork.
No, because at the end of the day, I can hang that thing on my wall.
Right.
And I can enjoy it,
you
or
can
I
sell
can
it.
throw darts at it.
You could sell it for money.
Sure you can. I mean, there are features about it that are the same, but it's not.
Same as with Bitcoin, you can just sell it for money. The question is what definition of money you have.
Not the same. And look, one of the things we have to remember about, there are a lot of things that come within this crypto world. So for example, we could be talking about, instead of Bitcoin, we could be talking about digital currency. Now that's something very different.
I think that's different too. I buy that. I accept that.
That's right. But
Why? Why is digital currency different than Bitcoin?
because that's a government-backed electronic transfer.
So now the real view is here. They twist the entire topic of Bitcoin towards CBDC, central backed digital currencies, which is a government-backed electronic transfer, which they can control. Bitcoin they can't control, hence why they are against Bitcoin and they feel a threat towards it. That's why we also had that energy bill topic being discussed previously, which induced more fears regarding Bitcoin. It's all propaganda because Bitcoin is ultimately a better solution than what the US dollar is. The real agenda of the government is the CBDCs, all right, which is
And And it can be denominated in dollars, it could be denominated in euros, it could be denominated in some new language that's made up.
Denominated in a new language that's made up. She says US dollar and the euro, probably they're going to make a basket of several currencies and call that a new currency. But we can also denominate into a Bitcoin. We can also denominate into gold. That's not what she mentioned because it's not in her own interest. I would argue to do a currency that's backed with Bitcoin or backed with gold, because then you have a relatively safe economy. However, the point is though that essentially governments all want a CBDC and not Bitcoin, as Bitcoin is a threat to them and they can't control Bitcoin as much as they can control soft money and the dollar. Hence why we see this response like we have right now. I'll just come to a conclusion a little bit later.
But that has something that backs it up. It has a government that says if at the end of the day there's a run on this stuff, everybody wants theirs out, the United States government promises there will be something to back it up.
Yeah, and that's the trick. So the US government says we back it up. This shows that they have a fear against digital currencies and Bitcoin overall, but they say it's that they back it up. Why would a government back something up in the first place? They back it up by printing an infinite amount of money, by bailing out banks that have been insolvent and have not been applying to the rules. Then, because of the fact that they are printing an infinite amount of money, inflation starts to skyrocket up. So the biggest portion of the people that are of society that lives in the country loses its purchasing power. And then finally, they raise taxes because otherwise they can't pay the bills for bailing out banks. And then at the end of the day, the rich get richer, the poor get poorer. So it's the other way around. But for them, they don't care. The fact is that they need to have a government-backed digital currency because they think it's the best solution for society.
And that's what banks are about. There'll be somebody there to back it up. But with Bitcoin, that's not the case. And then, of course, can we do one?
So it's not the case, as she mentioned. But ultimately, this slides video from Elizabeth Warren, Senate of the US, it shows that they have a fear against Bitcoin and digital currencies. And why? Well, we've just had a few banks being collapsed, and people who are attached to those banks start to understand the fact that self-custody is so important. Instead of having your money at a bank, which you don't have at a bank, but you're lending it towards a company that starts to try to make actually an ROI with your money. You should be having it in a safe bank that just keeps it there. That's the purpose of a bank, not to make money, not to increase risk with your money. So all those people start to have interest into crypto. The banking system in itself is fragile, which we also know. I'll be discussing the banking issues in a little bit. But even though if we take out a tiny portion of our money from the bank and swap it towards stable coins or towards Bitcoin or Ethereum, then we can let the entire system fall apart. So that's why she takes this very aggressive standpoint against Bitcoin, as most of them will probably understand the fact that crypto is the biggest threat that they have against the US dollar. And as a matter of time, more and more people will start to make the swap towards self-custody more and more through the actions that they do, instead of due to the fact that they wanted to actually swap. But the more they understand the concept that inflation does to their portfolio, inflation does to purchasing power, banks falling apart, reducing the value of the US dollar, etc., results into people jumping towards crypto. So we'll be discussing that a little bit more. I also have a very funny last item that I wanted to discuss, which is yesterday we've had Elon Musk announcing that the web logo swapped towards a Dogecoin, which was as promised. As we see here, he has been rumoring about this earlier. Elon Musk stated that he wanted to flip the logo and change the bird logo to a Doge, which he has been done. It is funny and it's good for crypto in some way, as due to the fact that Elon Musk has been doing that, people will be starting to Google Dogecoin again, start to look up at Bitcoin again. So there's some hype surrounding this topic, which is great for the markets, which is great for some exposure when it comes to crypto. And maybe, just maybe, we could wonder if Dogecoin is better than the US dollar. Perhaps it is. All right, let's dive into the charts. I'll be going into on-chain analysis for a little bit, but I'll primarily focus on Bitcoin and crypto. So when we discuss Bitcoin, there is a few topics that we have to focus on. First of all, we have to look at on-chain analysis to see how strong the actual productivity and the ecosystem of Bitcoin becomes. In this way, we can see that the hash rate, which is the mean hash rate on the screen, is accelerating. The computing power is getting higher and higher, which means that we have been seeing some hiccups during the period of bear markets. In this period, we had a slight drawdown on the hash rate. We've also seen a massive drawdown in 2021. There were two reasons for that. In 2018, we had the Bitcoin to Bitcoin Cash fork, which reduced the hash rate. Over here, we had the Chinese ban on mining Bitcoin, which imposed that people had to swap to Texas or to other countries, which reduced the hash rate for a little bit, and then we started to accelerate. So right now the hash rate is increasing even more and more, which implies that the Bitcoin network becomes stronger and stronger, which implies that Bitcoin price will follow the hash rate as soon as we can. Then we also have the market value to realized value ratio, which is the MVRV, often defined to get yourself into peaks of the markets and into bottoms of the markets. And you can see this dotted line here. As long as the price stays beneath it, you can argue that you are into a very good period of buying the actual asset. As long as it stays there, you can just accumulate the position and you'll be fine. In the previous periods in 2012, we had a pretty heavy bear market, or in terms of price action, not in terms of time. We had a long sustained bear market in 2015, which was during a recession in which it also stayed beneath. 2018, 2019, we had the exact same, resulting into Bitcoin rallying quite substantially after due to the Libra run, and also during some other features or actually events taking place. Now we had a pretty long period, just like 2015, in which we are moving sideways, actually the entire 2022 period, and now we're acting above that dotted line again. So we are back in an uptrend, and you could technically argue that as long as we stay above the dotted line, the bottom is in, and we're going to continue running when it comes to the Bitcoin price action, which means that we potentially are in the period of a relief rally before we are going to bottom out, as people are often combining the current price action to what we have seen in 2019. Why are people doing that? It's the prior bear market case, so if that took place, it must be happening now again. But if you go back in history, once we get above the dotted line, we do have some pullbacks, but we are just continuing massively in the trend. So in 2016, we had a breakout here too, and then standard between 20 to 40% corrections, but we never really got the retest and just continued the movement until we peaked out at the end of 2017. Now we broke up again and we flipped 20k for support, which means that now people are arguing that we need to get towards 10 to 12k before we're going to have the bull market based on macroeconomic events, and we'll discuss the topic on a later point. But based on this data and based on the amount, which N is 4 in this case, based on what we see, we could just have the continuation of the uptrend and just standard 20 to 40% corrections, which we also had here, but then we had the outlier of COVID. If we don't have such a black swan, the bottom is in and we continue trending, and targets are clearly defined on the chart. Then we also have a few other charts. In this case, we've got the realized price to liveliness ratio, which is the realized price is currently at 19.8k, which we bottomed on in the slight crash during the banking collapses. The realized price to liveness ratio is at 33.2k. What we want to see here is that, what you can see actually, is that we have been moving beneath the realized price for the longest period ever. So we had a period here of 300 days, or almost longest the period. We had one of 219 days, and now we clearly flipped the realized price as support, which is also the previous all-time high, and we started to run from there. More you don't need to know. We broke above this level, and you had a super long period to accumulate your position. Most likely we won't come back beneath the realized price until the next bear market. Then the RODL ratio, which is basically a ratio where you can find the amount of people that hold the positions. During a bear market, the HODL ratio and the HODL conviction is going through the roof, and the minimum is going to be reaching at the peak of the bull market. So in this case, this is a data point of 13 years, and the HODL conviction has been the highest, which could also argue to a conclusion that the previous bear market is the heaviest we have seen until now. 2015 was quite harsh, but I think that the previous one was, in terms of valuation of Bitcoin and in terms of price action, the worst we have seen. So the peak high here, or maximum HODL conviction, shows that the most people were holding through here, and now we start to decline with this HODL conviction, which means that we are changing hands with Bitcoins again. This can also mean that we are getting into a period where new buyers are stepping into the market. Probably you will be seeing Google Trends starting to shoot up, especially since Bitcoin has been doing really well when it comes to the banking crisis. We started to run up actually, which means that right now you're probably looking at some levels to get yourself into positions, which we are clearly going to discuss after. But you want to hold your position right now because you want to start selling during this period, which is the minimum HODL conviction, which means that people are looking to sell their positions. And then it's exchanging hands from people that have been holding long term towards people that have been holding short term. Going to dive more into that, but let's head towards the charts. Before we dive into Bitcoin, you have to be looking at the dollar currency index, right? The dollar currency index shows you the important factors, which is strong US dollar is usually meaning that other assets are not doing great, including Nasdaq. Weak US dollar shows that you want to be into risk on assets because these are usually doing great until proven otherwise. And in this case, we had this parabolic run through 2022, which resulted into Bitcoin showing weakness, as we all know, and also indices have not been doing great. Therefore, we can see that we had a pretty substantial correction. We start to paint a Burj Khalifa pattern when it comes to the DXY, and most likely we're going to have a retest taking place at these lows here. Most likely we will be coming back towards this level. Which color are we going to do the weekly? Let's do this. Most likely we will be getting back there in the coming few years, or at least get into those lower levels here. What I want to show is that we had this bounce resulting into Bitcoin correcting, and we have been pivoting at a crucial resistance point, which is this level here. We are getting to support again, but ultimately I think that every bounce on the DXY is for now to be shorted, which results into the markets of risk on continuing the momentum until the Fed starts to pivot again. Because pivoting is not a great sign for the economy and not a great sign for the Bitcoin overall. Now, when we look at the markets, we also have to look at the yields. The yields are currently falling apart. We've got a massive weekly bearish divergence, so most likely we are getting towards the top already. The 2-year yields are showing 4%, while the federal funds rate is higher, which means markets are not expecting the Fed to continue the policy. Hence why I think that we only have a window of a few months where Bitcoin starts to show strength until we start to correct again. What do I mean by that? I'll just show the Nasdaq first. Trend starts to continue going up. Most likely we can continue going up, but we start to print higher lows, higher highs, through which breaking through this crucial level at 13,500 points, this area will continue the strength on the markets for the Nasdaq. What I mentioned with potentially we have a few months of time before we start to correct with Bitcoin. I'll just get this clean chart going here, which means that we have been getting into on-chain analysis, and on-chain we see that the valuation of Bitcoin is the lowest in this period, right? We have been actually going beneath the all-time high of 2017, and now we are continuing the momentum. So most likely we will continue to break through, and right now we are consolidating against this crucial resistance, which I'll just mark blue. Once we crack through this level, we start to overshoot. There's nothing in between. A ton of people are shorting this level, and once we crack through it, we probably are going to reach these numbers here. I think anything between 40 to 45k will probably be a peak high, but I think that we will be having this run, and then we start to correct before we continue the rally again. That is what my ultimate scenario is at this point. And why is that? I'll dive into the Fed at some point, but the Fed has been hiking relatively heavily, and that hiking procedure resulted into this move, into strength on the DXY and into weakness on Bitcoin. Now they are getting towards the end stage of the hiking procedures, which means that for now the hikes are okay and the interest rate is okay, but the interest rate will imply a higher unemployment rate at some point, and it will imply that everything that has debt is going to fall apart at some point, not because of the rates going up, but because of time passing by. So the longer we stay into this high interest rate environment, the more we will be seeing cases of Silicon Valley, Signature, and the other one. So that is, and real estate is one of them. So we will be seeing that more, especially since small companies and small middle class companies are not able to get into debt at this point. It's too expensive. People like you and I are having a hard time buying a property right now because the rent expenses are just too high. So the value of real estate will drop, and all the people that have been compounding their real estate income, like the Airbnb flippers or all those VCs that are investing into real estate, those will be the ones that fall apart. But it just takes time. Which means that until he doesn't pivot and we get towards the end stage of the hiking procedures, we go up. Which means that at this point, you are eager to get into a position for Bitcoin. I think anything between here and 15k is still, for investment purposes, is a DCA strategy. I don't feel like you want to short based on the higher time frames, as we just have witnessed such a collapse. Probably you'll be feeling very eager to short 30k, but I'd rather wait for additional confirmation to jump into it. And once we break 30k, you get the hype back into the markets, and then you see, probably will be seeing altcoins following Bitcoin, like Litecoin. We'll also be seeing XRP, etc. But we'll be discussing that later on. This is my ultimate scenario when it comes to Bitcoin trading, the higher time frame. What are we looking at when it comes to the lower time frame case here? We've just witnessed a very harsh correction taking place towards 19.7k. I think it trapped me as well, but I was still on holiday. We've been witnessing a pretty heavy correction taking place here, and I'll just get towards this one. And we are looking for a few crucial levels to hold. So 25k is a clear level that we might be getting into a retesting point, but there is a question regarding that one. The most obvious level will most likely not be getting hit, and if we do, we probably slam through it. So if we get to 25k, of course I'll be a buy, but I think the chances of getting there is going to be very limited. I think that we're just consolidating at this point before we start to break out. And what's the crucial level for that? If we want to continue moving, we have to look at lower time frames. But based on the higher time frames, the trend is clearly upwards. We've just been seeing a few banks falling apart. Price has reversed. And the crucial level for Bitcoin is, of course, 25k. But if we look at the lower time frames, we need to sustain this entire range that we have here. So this range here is the support that we have to keep on. As long as we stay above this 27k barrier, we just witnessed the test yesterday and we have been coming back all the way, then we're gonna continue higher. Why is that? Well, we are making higher lows still here. So as long as we stay above this level here at 27k, we can continue pushing as we don't take liquidity as of much. What do we have on the upside? We do have 1, 2, 3, 4, 5, 6 tests of the level at 28.7k, which is this entire area that we have here. Another test towards there, and the more you start pushing up, you get an ascending triangle, but you start to get the liquidity above these highs, and then we can get enough pressure as more traders are jumping in and get the confirmation that we're going to break out to the upside, which means that there's a very likelihood of breaking through 28k towards 40 to 45k. That is my higher time frame view. As long as we stay above this zone here, everything is fine. If we lose this level, then I'm eager to have a short towards 25k and we have to reassess the trade. Alrighty. If we do lose 25k, of course, I'll be looking at any case here, but this is for now, price is here, so we assess at this point. Investment wise, just DCA these levels. Trading wise, probably looking for longs more than shorts. Only scalping, I'll be looking for shorts. Now, if you look at even lower time frames, we can clearly confirm, I've been mentioning this on Twitter earlier, we have been seeing this beautiful test, reclaim, 28k has been giving some bounce, and we have been getting these levels here. We could have been getting some scalp shorts, but I think that the chances of us continuing are relatively high at this point, which means that between this entire impulse, the next level we can look at is 30.4k. So once we crack the high, I'm assuming we break towards 30.4k relatively fast. I hope you have been enjoying this new format of the video. Make sure to hit the like button, subscribe to this YouTube channel. If you want to stay on point and up to date, make sure to follow me on Twitter. If you want to see my trades and how I develop trade ideas, including my team, make sure to check out the website 8 Global. And as I mentioned prior to this actual update, the course is going to get there. The whitelist is beneath. Check it out and whitelist yourself if you want to win one of those. And also, I'll see you again on Thursday. Keep on smiling. Make sure to enjoy everything you do. Make it simple. Make it relaxed. And I'll see you again on Thursday for the macroeconomics update. Ciao.